It's Friday, and I am getting down on Friday because I am your host, Andrew, and this is Crypto Espresso, your teeny tiny daily shot of caffeinated crypto headlines. This is a gigantic episode of Crypto Espresso, so buckle up and get ready to have all of the news rolled up into a hard ball and just thrown at your face. First up, in another blow to 340,000 customers who are frozen out of their $900 million, the U.S. Securities and Exchange Commission have announced they're suing Genesis and Gemini, accusing them of selling unregistered securities. SEC Chair Gary Gensler claims they bypassed disclosure rules designed to protect investors, adding, "Crypto lending platforms and their intermediaries need to comply with our time-tested security laws. Doing so best protects investors. It promotes trust in markets. It's not optional, it's the law." Officials have suggested that the crisis engulfing Genesis may be partly responsible for the Earn Program being targeted. Gemini, for their part, is threatening to sue Genesis as it attempts to recoup customer funds. As surely as the sun rises in the east, Sam Bankman-Fried will continue to talk too much. Or in this case, type too much. Although he's under house arrest in California, he's launched a Substack, writing a lengthy post about the collapse of FTX. Don't expect much introspection, though. The 30-year-old has insisted that he could have saved the exchange if he had been given only a few more weeks, though it doesn't really explain the alleged misuse of customer funds by sister trading firm Alameda Research. The alleged entrepreneur went on to deny stashing billions away and said his personal Robinhood shares, which have been seized by the feds, should have been used to make customers whole. He once again questioned why FTX US customers haven't had their payouts, arguing this exchange has always been solvent. SBF's blog post also detailed his favorite game to play. No, it's not League of Legends, it's the blame game. Shifting responsibility for FTX's demise, SBF's pointing his clammy fingers at his own lawyers, the man who replaced him as the exchange's CEO, and even Binance's Changpeng Zhao. He claims he was strong-armed into declaring bankruptcy prematurely, and his legal team piled pressure on his friends and family. SBF again alleges that CZ initiated a quick targeted crash, but Binance's leader has long refuted this, and says FTX only has itself to blame. He also warns that the crypto market also had a role in how things imploded, with countless projects collapsing and Bitcoin's price plummeting. The pity party post may lead to accusations that SBF is attempting to rewrite history ahead of his criminal trial in October. Bitcoin's bullish momentum is continuing to plow forward, with the world's biggest cryptocurrency briefly cracking $19,000 on Thursday. Please take this opportunity to knock on the nearest piece of wood. This is a pretty significant milestone considering that Bitcoin hasn't been above this level since the FTX exchange collapse back in November. This isn't coming from nowhere though. US inflation has stood at 6.5% in December, which is the smallest increase in over a year. On Twitter, meanwhile, crypto analyst Michel von de Poppe expressed doubt that Bitcoin can crack that psychologically significant threshold of $20,000. More than 10,000 people voted in his Twitter poll on Thursday that asked whether we were in a new bull market, and 64% of people said no. Bitcoin has comfortably outperformed other top currencies, Ether, XRP, and Cardano, over the last 24 hours. When crypto projects freeze or limit withdrawals, it's normally a warning sign that a bankruptcy is imminent. However, a Twitter update from Wyre thankfully suggests that this might not always be the case. The crypto payments platform had spooked users by announcing that they would only be able to withdraw 90% of their balances, amid reports that a shutdown was imminent. But in a new update on Thursday, Wyre revealed that it has now received financing from a strategic partner, meaning that its operations can return to normal. Wyre hopes the new capital will help us continue to deliver on our mission to simplify and revolutionize the global financial ecosystem, but it remains unclear whether users will want to join them for that ride. Bitconnect was one of the biggest crypto Ponzi schemes of all time, with thousands of investors losing at least $2.4 billion. Well, it's years later, and the US Justice Department has now revealed that $17 million is going to be paid in restitution to just 800 people. It is unclear how those who receive compensation will be chosen, but we do know that they will be spread across 40 countries. Prosecutors are continuing in their attempts to bring those involved in Bitconnect to justice. The project's top promoter in the US recently pleaded guilty to conspiracy to commit wire fraud and admitted that he misled investors. Meanwhile, Bitconnect's founder has been indicted by a grand jury in California and charged with orchestrating the Ponzi scheme. Nexo's offices have been raided by Bulgarian authorities following some pretty serious allegations allegations, which include tax and money laundering violations, the establishment of an organized crime group, and unlicensed banking. It's also claimed that the crypto lending platform had been used to transfer digital assets by someone financing terrorism. Nexo, for their part, has denied wrongdoing and even suggested Bulgaria is corrupt, accusing regulators of adopting a kick-first, ask-questions-later approach. The dramatic developments caused Nexo's token to slide by more than 5%, with on-chain intelligence showing large outflows worth millions of dollars as users pull their money from the platform. The proceeds of crypto crime hit an all-time high last year, reaching a whopping $20 billion. But there is more than initially meets the eye. According to the Chainalysis 2023 Crypto Crime Report, $8.8 billion of this figure involved sanctions violations following Russia's invasion of Ukraine. The overall percentage of illicit crypto transactions remains tiny, with a share of just 0.24%. Chainalysis said there was another big challenge as it crunched the numbers. Some in the industry feel transaction volumes from Celsius, Three Arrows Capital, FTX, and others should have been included, with some of these bankrupt projects facing allegations of fraud. The blockchain intelligence firm has chosen not to include this and said it was best to leave questions of criminality to the legal system. And finally, we'll leave you with this. Miss Universe is currently underway in New Orleans, and El Salvador's contestant couldn't resist paying tribute to Bitcoin during the costume pageant. Alejandra Guajardo's outfit presented a history of the country's currency, beginning with cocoa beans on her back. Then there was a nod to the Salvadorian colon, which was later replaced by the US dollar in 2001. But last and certainly not least, since we're talking about it, Guajardo smiled as she carried a glittering golden staff that was adorned with Bitcoin's logo, reflecting President Nayib Bukele's decision to make Bitcoin legal tender back in September of 2021. It's a pretty surreal clip, with an announcer approvingly declaring, "You don't need a sash to walk around dressed in cash." And this announcer approvingly declares, "You don't need Andrew's invitation to like this video, subscribe to our YouTube channel, and click on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live." Seriously, you could do it anytime. I don't need to tell you. And what did you think about today's video? Let us know by yelling your feedback into a pillow, because we still don't have comments enabled. Spam bots have taken over. The robots have won. Something John Connor. Something about Skynet. I don't know. Terminator. Questions about our headlines or crypto in general? Ask Alex in that description below. Alex is a great resource for all things Web3 and the metaverse, and that about does it for today and this week. Again, I've been your host, Andrew. These have been your headlines, and ladies and gentlemen, the weekend. See you Monday.